FOB shipping point and destination. FOB shipping point, what does this mean if you haven't seen this before? Well, this means the title transfers of the goods at the shipping point. Destination, the title transfers at the destination. And this is important you'll see this on reg as well, and I guess BEC, but that's important for the legal title, who owns it, right? Who has the liability. So you have the liability until the title transfers. So the seller has the liability while it's being transferred, and in this case, the title transfers, so the buyer has the liability once the title transfers while it's being shipped. That's important for legal purposes. For who keeps it on inventory, well, if the terms are FOB shipping point, right, these are terms agreed upon between the buyer and the seller, just, whatever they want to do, they can do either or. Well, when the title transfers, it's removed from the seller's inventory account and you deal with your journal entries, right? And classic journal entry, I'll write it out right here for you. Get familiar with it. It's a good one. It's an oldie and a goodie, right? So kind of a double journal entry. This is a normal, right? Like nothing funky about this, just a straight sale. So when we sell something, we are going to debit cash and credit inventory. That's what's going to happen, right? We are going to debit cash, credit inventory. What else do we do? We're going to debit cost of goods sold because that's an expense, and we're going to credit revenue. So these four accounts, kind of running out of a little room there, aren't I? Let's add some space for it. But those four accounts together, those constitute a sale and cash could be AR, right? It can be AR. It doesn't have to be, paid out right away. So let's think about this for a second. Generally these two will go together and cash and revenue will go together, but I like to think of them all four together so you don't really forget about them. Because let's think about what you have your selling price and you have your cost of it. So let's say that, I'll start making up some numbers. Let's say that we sold these goods for $20,000. So we would do cash or AR for $20,000. We would do revenue for $20,000. Awesome. But you're not going to sell it at break even, at least, hopefully you're not. So your inventory and cost of goods sold numbers will be different. And let's say those are 15. So you made a $5,000 profit. So in this case, you're going to debit cost of goods sold because that's an expense for $15,000. And then you're going to credit inventory because you're reducing your inventory for $15,000. So these journal entries, this is what happens when the title transfers. This is what you'll do and recognize it as that title transfers. These journal entries are core to, basically selling anything, right? Super important. Get familiar with them, get to know them. They will help you out. All right, so general rules here. FOB shipping point. Inventory is buyers when received, except, okay, just a couple exceptions here. I wouldn't worry about this too much. Just look through it. It should make sense, right? So the inventory is the buyers when received, except if it's FOB shipping point. So generally, yes, the sale will be complete when the buyer receives the goods. If it's consignment, it's the sellers, not the buyers, right? If we're Vineyard Vines, it is Vineyard Vines. It's never going to be Nordstrom's or Gap's or anything. Sales with buybacks. So, right, if you buy it back, that's going to be sellers, not the buyers. Sales with high rates of return. If you can't expect it to keep being sold, then that's going to be not included in the inventory amount. And sales and installments. If you can estimate collectability. So a couple different items here, more so the shipping point and consignment goods. These are going to be the more important ones you'll see here. And again, why is it important? We're trying to present the financial statements properly for a company. Well, you can't properly state the financial statements if there are, incorrect asset balances.